Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, go ahead and hit that subscribe button and also the notification bell so you never miss another video from us. And while you're at it, if you like the content of this video, hit that like button. We'd appreciate it. It helps us grow the channel and also lets us know that you like the content we're producing. How are you today, Brian?
Hey, Michelle, I'm doing great. How about yourself?
Doing good. Thank you for asking.
Awesome.
So today we've on this channel, we've talked quite a bit about, traditional versus Roth IRAs, explain the types of IRAs out there. And today I want us to focus on the difference between the SEP IRA and the Simple IRA and which one is best for small businesses.
Oh, good. This is good, Michelle. I'm glad you went this route on these ones because everyone thinks of business with a 401k, right?
Right.
Well, this is more towards the simple side as far as having a simple plan for small employee companies under 100. So there's a great
and even for solar.
Yeah, same thing with solo. You're exactly right. So
all right. Well, let's dive in. Let's talk a little bit about the SEP IRA.
Okay. SEP IRA is called the Simplified Employee Pension Plan, and it allows the employer to set up traditional IRAs for themselves and for their employees. No limit on the size of the business. So you could be a solo, self-employed individual and set your SEP IRA up on yourself, right? The beauty of these small plans, the SEP and the Simple both is, Michelle, they don't have the startup cost and the expensive ongoing cost of the 401k plans, a bigger workplace plan. So here's the key though with this one. It only allows employer contributions, nothing from the employees. Okay. And if you're the employer, all contributions must be equal to all of your eligible employees. So there are some guidelines that you have to follow. Like maximum limits to eligibility. So you've got to must be 21 years old, work for your employer 3 of the last 5 years, and at least $650 in compensation per year. So that's not too bad, right? But that's the max limits. You could just say, you know what? There's no limits. Anyone can sign up. And IRS is going to say, yes, that's allowed. So you as the business are in control of this. So
I have a quick question, clarifying question on the employer contributions, only employer contributions. Nothing comes from an employee. So does that mean that the employer would then take, like, for example, say I'm an employer and I have an employee working for me and they make $50,000 a year. We decide on that. But I say, you know what, I'm going to withhold $5,000 of that and put it into this IRA for you. Or does it not work like that? How does it work?
The employer must fund the SEP IRA with their funds.
Okay, got it. So this would be like more of a big bonus.
Yeah, there's like a bonus account. So and here's the other thing, Michelle. This is great for years. It's flexible contributions. So if you're an employer, you're not set to a certain amount that you have to put in for employees each year. Huge. This is great for when you have a blockbuster year and you want to reward your employees. You can pay them extra through this, and yourself also. But in bad years, you don't have to put as much in. So it's flexible to you, the employer. So
okay, well, what do the contributions limits look like?
Okay, this is different than what we speak all the time on like the traditional and the Roth, where it's 6,000 and 7,000 over the age of 50, right? This is based on the first 305,000 of compensation for 2022, and your annual limits are the smaller of $61,000 or 25% of the income of that individual. It could be the employer or the employee, either one. So,
okay, so annual limits. Like it's either the smaller of either 61,000 or 25%.
Yeah. And here's an example on that. Let's say, Michelle, you made $100,000. Okay. And you've got a SEP IRA set up and you want to pay yourself a nice bonus. You said, hey, this is great. I've done great last year. Well, you only made 100,000, so you can't put the 61,000 in because that's more than the 25% of your income. So
Right.
what you can do is put in the 25,000
25% of that.
of that, and now you're good to go for the year. So
Okay. And so, all right. So is this all like, can the employer, whether you're solo or you're doing it for other people, do you get a tax break for putting this money for contributing?
yeah, yes, you do, and you get to deduct the contributions, and the employee also. Think about the employee, Michelle. If you're the employer, you get a tax break for it. If you're an employee, you also get a tax break. Why? Because the funds are going in pre-tax, kind of like a 401k does, stuff like that.
Okay.
But 100% vested immediately.
Okay. So another quick question for you. So let's say I'm an employee and my employer puts money in for me. Can I still have my own Roth?
Yes,
Or
yes.
traditional?
Yeah, remember, now we're separating the two.
These are
You can set up, yeah, the SEP is the business plan, okay? But you can always have your Roth IRA or your traditional IRA based on your income limits for the year.
Okay, so if I'm a solo, let's say I'm solar practitioner, what do they call it? Solo, what's the word?
Solo employee,
So employee, right?
sole proprietor.
Sole proprietor, that's what I'm not, practitioner. Solo proprietor. Can I have a Roth or a traditional and also have a SEP?
Yeah, as long as you meet the income guidelines of each one and you don't go past the contribution limits of each one.
Okay. All right, great. Good to know. All right. So anything else that we need to know about the SEP?
No, it's pretty SEP-y, I guess, compared to the next one, which is going to be simple.
Well, I do have a question real quick on vesting. Like, what if for employees and the employer, when the money goes in, it's 100% there? Like, what's the vesting schedule look like?
Yeah, it's 100% vested immediately.
You don't have to wait 5 months
No.
like you will, or 5 years or what have you.
Yeah, not like a traditional
401k.
workplace retirement account like a 403B or 401k plan.
Okay. All right. So let's talk about the simple
Okay.
IRA.
Slight difference here. It's very simple. Both plans are very simple to set up and use for small businesses, but it stands for Savings Incentive Match Plan is what it stands for employees. So this, Michelle, allows both employers and employees to contribute.
Okay.
So usually see this in small business plans under 100 employees, but here's the difference between the other. Remember how the simple plan or the SEP plan was flexible, right?
Right.
The employer in this one has required contributions. Okay. And them limits right now are matching contributions up to 3% of the income, right? Or 2% non-elective contributions. Then that means the employees don't have to contribute.
But then the employer will still have to contribute that 2%.
2%. Yeah. And it's not flexible. So there are set percentages, unlike the SEP plan.
Got it. All right. And vesting schedule is the same?
It's the same. An employee is 100% vested at any time. And, both of these plans are really simple to set up. So great for small businesses. So.
Sure, for sure. And also solopreneurs as well, right? It does allow you to put a lot more in than that 6,000.
A lot more in.
Or 70,000 if you're 7,000 if you're over 50.
Yeah.
All right. So is there anything else before we wrap up here that people watching watch to the end need to know?
The question that we started out with is which one's best for my small business? Well, now that we went through the facts of it, where does your small business fit into this? Do you want to have it flexible because your income's flexible each year? Do you want to allow your employees to contribute? Is it just yourself? There's a lot of questions to ask, and make sure if you want your specific situation for us to give you some information of which plan might make better sense for you, drop your information below and ask us questions about this because it's all about you. So there's no right or wrong which one will work best. So
absolutely. What do you want? Where are you? What do you want? What are you looking to do? And then make a decision.
Yes.
Based on that. All right. Awesome. Thank you so much. If you've watched to the end and you like this content, please hit that thumbs up sign, that like button. We'd appreciate it. It helps us grow this channel.
Yes.
And thank you for watching to the very end. Appreciate it. Thanks, Brian.
Thanks, Michelle.